Hello and welcome to VSA Capital Video. I'm Ollie O'Donnell and today we'll be looking at EQ Resources, an ASX listed tungsten miner with two producing mines. I'm delighted to be joined by Kevin MacNeill, the CEO, who will be taking us through the operations and outlook. Kevin, many thanks for joining me.
Great, thanks, Ollie. It's a pleasure to be with you and speaking to you from beautiful Spain this morning.
Yes, obviously your operations are in Spain and Australia, but perhaps you kick us off with a 30-second overview of the company as where it stands today, how it fits into the tungsten market globally, and also what your wider long-term ambition is.
Yeah, okay, that's a big question. So we are a global tungsten producer with two Tier A countries, both Australia and Spain. We started in Australia at our Mt Carbine operation, and we produce about 200 tons of concentrate a month from Australia. And then in Spain, we took it over in January, and we are ramping up the production here on recovery. And we're producing about 140 tons of higher quality 65% concentrate here in Spain. So yeah, it's been, so we are, answer to your question, we are one of the largest Western tungsten producer, if not the largest, I believe, in the Western hemisphere. And we supplying critical metals. The tungsten market has been on fire as of late. It's moved up from what we call $300 for 10 kilograms or an MTU. It's gone up to $360 an MTU in the last couple of months. So there's a real demand coming on. We feel it at the mine site as well. Like we're getting lots of calls from different suppliers looking for tungsten.
Excellent. And two operations, two ramp-ups, restarts. It's a huge amount of work to be taking on at the moment, but you have brought in three strategic type partners over the last few months. Who are these three partners, and why do they think that EQ can execute on such a big job?
Yeah, I guess we have a few. So Cronimet have been a partner with us. They're an off-taker. Mason Group out of Vietnam, where we sell all our concentrate out of carbine to them. And they in turn have provided technical support to us. And just stay tuned with this one. We're continuing to get closer and closer to Mason as time goes on.
And most recently, you just received a significant investment from the Queensland Investment Committee, specifically for Mt Carbine.
Yeah, QIC have committed to a $20 million investment for expansion. After, I must say, about a 6-month due diligence period. It was quite a difficult due diligence that we've gone through. So, but yeah, great support locally from in critical metals in particular. That was a critical metals battery fund. And also, we received a grant, in particular, a year and a half ago from the federal government for $6 million as well, which gave us a nice boost on the project. One of the things I think at Carbine that we haven't overcapitalized much on the operation. It's a fairly simple, plain operation. And again, we don't have much capital on this operation at Saloro. There was about $200 million spent on this operation over a 4-year period. And we certainly, we've taken on some debt and paid it down subsequently to 25 million euros. We had 35 million in debt. We paid it down to 25 million euros now. So that's, so yeah, reasonable to get two operations into production to be sitting on that low of debt.
You perhaps touched on it or alluded to it, but you have shown in the last few months increasing recoveries at Mt Carbine and looking to do the same thing in Saloro. What is it that's allowed you to do that? And is that the thing that links the rationale for making this second acquisition in Spain? Because obviously difficult to make cost synergies or the other normal ideas that you might have for M&A. These operations are otherwise quite separate.
Yeah, 100% right, Ollie. The big thing was recovery at Saloro, right? We saw the opportunity to increase recovery, and I must say it hasn't been as easy as we thought it was going to be to get it. Where summer's around 50-55%, and I think we'll make some progress in the next couple of weeks here as well. I think we've understood, been spending the last week ripping the plant apart, understanding where the losses are occurring in particular. And I think we've identified that now, and we're digging deep into that section. So I think I'm pretty excited about it, to be honest with you. I think we're going to maybe even overachieve on this one.
And ore sorting is something that a lot of tungsten mines are looking at. You're starting to deploy that across both operations, and it's something that you have a lot of experience at from previous operations. So perhaps you can explain the impact of ore sorting, or potential impact, and what you've done in it previously.
Yeah, thanks. I bought my first sorter in 2009. So I've been running sorters pretty much consistently since then. We really believe we have a very close relationship with Tomra. We believe that on their XRT sorting, they're one of the leaders in the world. And one thing that we understood early on, before we even had tungsten mines, when I was working with Cronimet in South Africa, that we realized through all the test work that we done, tungsten was the best sorting mineral that we could find. So we went out shopping, looking for waste dumps that had tungsten in it in large quantities, and Mt Carbine was one that popped. And that's how we get into that operation, because we saw that it has a huge benefit. So we take, just for the layman, Ollie, in your audience, so we take, let's say, 100 tons an hour coming into the plant. We reduce that to 10 tons an hour dry at 40 millimeter size particles, and we get immeasurable tails virtually out of it. So we get like 99%, 98% recovery coming through those sorters, because we just don't see losses in the sorters when they're working correctly, obviously. But so it's a real benefit. So your downstream plant can be very limited capital on the downstream side of the operation. So we run 3,000 tons at Mt Carbine, and we have a 500 ton a day gravity plant. So we reduce the tonnage down so much that we're able to just run a very limited gravity plant. So others have picked up on that as well. They've been trialing it, and certainly not all ores work with it. Like, you have to be very specific which type of ores that work with it, and do your test work correctly.
Excellent. Let's take a look at Mt Carbine specifically. So what have you had to do? And actually, let's split this up into the processing plant and then the mine. What have you had to do to turn around the processing plant, and how far are you through that process?
So Carbine's a little bit of a different beast than Saloro. So we started from scratch on the on that. We started with processing tailings, and then we brought in an XRT ore sorter, and we started on the waste dump. And there's 12 million tons of waste dump that's very low grade, but again, economic. And then through that process, over a couple of years, we drilled under the old open pit, and we found some really nice ore. So we did a JORC resource on that ore, and then we drilled deeper, and we find that this thing extends immensely. Like, so the open pit portion of it is literally less than 20% of the overall resource on the operation. So we announced part of that QIC funding was to look at going underground. So that's quite exciting for us, because it'll have a 25-30 year mine life underground, this operation. And it's very solid rock. There's no reason. I shouldn't say that. I started my career in 1985. They closed this mine in 1985, but they went down about a half a kilometer underground. They started to go down, and the price of tungsten collapsed, and they had to abandon that. So what we do have a very good starting point with a shaft that goes, or not a shaft, but a decline that goes underground, and we'll be opening that up in the very near future.
And with the open pit, I think that the overall resource in total is about 42 million tons at 0.28%
Right.
tungsten. How much of that relates to the open pit? And can you also talk us through the recent drilling, which has been much higher grade than the average?
Yeah. As you go deeper in the deposit, once you hit certain levels, like we find that the grade decreases because the veins start spreading out as they get closer to surface, and they become thinner and more wispy and spreading, thus lowering the grade. As they come back down together into a trunk of mineralization, we find that this is very high grade. This mineralized zone that we're into. So what we call our 295 RL level, which is about 60 meters from the top of the pit, we're finding the grade is getting very juicy. So we're drilling a lot of RC holes into this section in detail and under the high wall as well, that we've drilled recently and announced that we found some really high grade. And fortunately, also on one or two of the vein systems, what there's three in the pit, two of the vein systems come very high up into the system. So when we're stripping back, we'll be getting ore earlier than we thought we were originally, and that's why we drilled that, because it looked like it was going to be high grade visually. And we stepped back and we drilled it, and sure enough, it was good.
Excellent. So extra grade bump going into in the mill in the early part of operations, and also rising prices. But how long will this first open pit section likely last?
It's about we have different pit shells that we're working through right now. So we have like a 5 year. We have a what we call our pit 1, 2, and 3. Pit 1 and 2 will definitely be mined open pit. Pit 3, we're considering whether we take that ore from underground or whether we take it from surface. So we're currently putting that through feasibility. And like we announced that we will be opening that decline, going in, taking a look at it, and then doing some drilling from underground to see how it stacks together. And then we'll be doing some trial mining as well with some of that QIC funding, and just seeing how we're able to mine this out and before we go full scale. So this is like an $8 million program for the underground, and 12 million of that program is to beef up our current crushing setup and to install a bigger crushing circuit to be able to handle more tons into the plant.
Excellent. When you first started work on Mt Carbine, the open pit was full of water. So is dewatering in the underground something you're going to have to tackle as well before you get drilling down there?
Yeah, it's we don't know. It's still closed off, Ollie. So we're going to open it up and take a look, but it's a very small volume compared to the open pit that needs to be pumped out. The beauty of Mount Carbine, all the water is neutral. It's a pH of 7. Like we don't have any acid mine drainage and any environmental issues to deal with, right? So the tungsten it's very benign. It's like a rock quarry, if you will. So, and speaking of which, we do have a quarry, a rock quarry, because of the sorting technology. We're able to get this beautiful blue aggregate. We make 18 different quarry products here, and we have a full-time quarry operating in the region. Trucks coming in and using the material. So it's been a little added bonus to the operation, as well as get rid of some of the material off site.
And are you able to give us a bit of a sort of outlook for the operations over the next few months? What are the milestones, and how have the finances been performing?
Yeah, big milestone here at Saloro. My accountant asked me basically the same question this morning, and I said, "Can you stand by for a week or two here till I'm finished, and then I can be a little bit more accurate with our predictions at Saloro, because it really makes such a difference on the recovery." The grade is fine here. The throughput, the plant is amazing, and so yeah, we're just getting the final recovery area sorted out, and then yeah, it could be very good. I would defer on this. Carbine, I think we're on target. We're looking at 200 tons of concentrate again this month. We've had a couple of lower grade months earlier in the quarter, and we're back into the high grade as we strip off. We had a bit of lower grade, but I think we'll be very close to last quarter's production, and then hopefully ramping up again from there. So it's been Carbine. It's continuing expanding. I think we are looking at several weeks here now, like we're getting record production in the last week or so. So yeah, we'll see how the weekend's out, but we're pretty confident that we'll be doing okay in that regard at Carbine.
Excellent. And at Saloro, you're still, sounds like you're still getting your feet in under the desk there, but can you give us a bit of an overview of the operation, how it differs to Mt Carbine?
Yeah, it's a beautiful plant. Like I said, they spend a couple of $100 million Aussie on this plant, and it's just a stunning operation. It does 100,000 tons a month, the operation, and with the two XRT ore sorters that we put in, we can even push that up higher because on throughput. So it has the ability to really outproduce everything in our company. Again, it comes down to the work that we've been doing is chasing the recovery through the plant and trying to get that up. And it's a scheelite ore, so it's different than Carbine, where we have a wolframite, which is much more forgiving. The scheelite tends to break down ultra fine and it is difficult to get. So we don't expect an 80% recovery, but I do expect a 65, 70% recovery. So I think, yeah, and it's a brand new plant. It's beautiful. So we're really excited about this operation and getting it. It's probably the opportunity, as you know, these things don't come often at the right time in a company's history. And, you know, like it is a lot of work. You alluded to that right now we're bedding down Carbine and we'll get this and, you know, but we felt it was just an amazing opportunity. So we grabbed it. So strategically, the company wants to get a really decent supply to be able to supply a refinery and to get into the downstream market, somewhat providing APT, but not building our own APT plant, partnering, toll treating, whatever. But there's been a lot of interest from downstream players coming to us, wanting to looking at investment to secure supply.
Excellent. And with that 20 million from the QIC, which was a loan facility, you also were then able to go to the market to do an equity placing. So where does the balance sheet sit now?
So we're still filling CPs on the QIC, so that won't reflect on the balance sheet for this quarter, but we're very close to fulfilling them. And then we get it in two tranches. The QIC comes to 12 million drawdown as we develop the plant and as we go underground. That's a staged drawdown, so you don't see that lump of money in the account. And then with the equity raise, we certainly have been pumping, buying some new equipment, some new sorters, getting that up and running. So yeah, we're in half decent shape. We'd like to be a little bit more. Like we're still not making enough money at Saloro, and Carbine is a bit of a break even. So the two operations are a little break even right now. So we're trying to get them up and making money. And certainly with this price, it's been a huge win. Getting the a 10-20% notch up in the price of tungsten has been really helpful.
Excellent. Well, look, that's been a roller coaster run through of all the operations, and there's plenty more detail we could go into. But thank you very much, Kevin, for taking the time to talk to us today. And I hope we'll be back to update in a couple of months' time and see the progress you're making.
Oh, wonderful. Thanks, Oliver. Appreciate it.